back to the show. Hope you're having a wonderful day today. We give a, I know I ain't posted a video in a while, but um, consider this the beginning of my consistency. I currently have a trade in right now for dollar CAD. Let's go down to the 30-minute. I, if you don't know me, I normally trade from the 4-day, 4-hour, and the daily. Those are the main two time frames that I look at when I want to place a trade. I do this not about to sound right. I do multiple time frame analysis, but the 4-hour and the daily are where the main time frames I look at to place trades. But let's go down to the 30 minutes so you can see a more clear view of my positions. So let's go to the 4-hour. Close this a little bit. I saw this bearish, not bearish, bullish butterfly. It, it's not. It's not adhering to the Pacific ratios, um, but all in all, it did play out. So at least so far it's playing out. So I did get chopped up on this range right here. I think I put a trade in right here before, but it obviously it ranged a little bit and it went down. Yeah, I'm trying to say two things at once. What the type of trader I'm still figuring. I'm not really figuring out what kind of trader I am. More solidifying what kind of trader I am. I saw and one thing I like about trading is a measure move. The concept of measure moves. It's not a precise It's nothing precise, but it does give you a ballpark figure of where something will go. And to give you an example of that, this range right here, I measured this range with this little rectangle and I brought it down. And from the point where it broke out the range, it the geometry is I like it. I like the geometry in the market. It somewhat the same. And to give you another example, I saw this is a 30-minute, the price coming down right here, right? And you can consider this as a bear flag. This little small, bring this up, this small pattern right here. You can somewhat consider it as a bear flag. So take the pole, it gives you a ballpark figure and not figure, but a ballpark area where price could go. So I like the geometry in the markets. Um, I'm using those type of measure moves and geometric patterns, and I'm trying to implement those more and more into my trading strategy. But as far as my trades, I want to give a shout out to Hannah Forex just because she put me on game of this calculator, this position size calculator, and I like it. So right now I'm doing paper trading. I'm figuring some things out, and the paper I think got the paper trade set up at 10,000, and I did 1% of that. So I'm practicing scaling out. So my first scale out is at a 1.62 risk reward. The second one is a 4.25, and the third one is a 5.08. Let's go to the higher time frame of daily and why I have those. So the first, let's begin at the hour. The first one, 50 pip. The first one is at 50 pips. So I'm trying to figure out if I should. The first scale out should be a 50 pip scale out automatically. I'm trying to figure that out. One one reason I have to not do that is because I'm a swing trader. I'm not a day trader. And depending on the structure that I may trade, 50 pips may be small, but then again, as my mentor say, you know, you don't disrespect money. 50 pips is 50 pips. So I think I'm going to go with the 50 pip as the first scale out, and then the next two scale out are going to be at either Fibonacci areas or areas of support resistance, historical support resistance, or area of where a structure may be retesting uh, or doing a retest. So let's jump back to the 4 hour. So my first scale out right here is at 50 pips. My second scale out is at a Fibonacci level of, this is the 386 right here. My second scale out is at a 386. And my last scale out is, let's go to a higher time frame, is at right before this structure. It's like a descending triangle. So I put my last scale out right before the bottom of that structure. So this is the EURCHF. Um, yeah, it's the EURCHF. Now, also what I'm doing is I'm figuring out what I should do. This is the Euro Swiss franc. I'm a swing trader. I'm practicing on being a structure, pattern, harmonic trader, right? Implementing all of those into my trading strategy. But actually, let's go back to the euro, not the euro, but the dollar CAD. Right now, I'm up 43.38 on a dollar CAD. The second scale out is at 217 pips, and the last scale out is at 258 pips. I think, what is the position size? Oh, dollar 96 on a position size. So yeah, that's paper trading. Let's go back to the Euro CAD or Euro Swiss franc. Euro Swiss franc. We're on 4 hour chart. Let's go to a 3-day, so you all can see the wider structure. I like these chart patterns right here, where you have a sharp decline and you see price is starting to rebound. I've been seeing these over and over again, not a lot, but when I see them, I see that that's a easy. It tends to be, mind you, it tends to be a easy, common 618 retrace, either 382 to 618 area retrace. So I like these type of chart formations. I think they are, shooting fish in a barrel. It's I like it. So this is the larger structure. Let's go back down to a 4 hour on this Euro Swiss franc. So what I was saying is, I'm thinking about doing, what should I do? So have two. I don't want to be in two trades at once, right? Two high probability trades at once. And so right now I'm in a trade on a dollar CAD. And this is going to be my second trade of the Euro Swiss franc. Now, what I'm thinking about doing is, let's say the dollar CAD, it hits 50 pips. Once it hits 50 pips, I'm going to move up my stop loss to break even. So essentially, I can enter another trade. So right now, what I'm trying to say right now, I'm in the two trades that I'm choosing right now is the dollar CAD and the Euro Swiss franc. So the dollar CAD hits 50 pips, and now that I'm saying this out loud, I think I'm gonna have my first scale out of 50 pips, because they can signify to me that, hey, move your stop loss up and start looking for another trade. So dollar CAD hits 50 pips, I'm gonna move my stop loss up to my buy stop or sell stop, depending on what position I'm taking. I'll move my stop loss up to break even. So now I'll be looking at another pair to trade, since I can't lose money on a dollar CAD, and my second uh, trading pair I'm in right now, I'm going to be in, is the Euro Swiss franc. dollar CAD hits 50 pips, move my stop loss up. So then I'll be looking for another trading pair to add to uh, the trades I'm already in. I'm thinking about doing that because I don't. The situation that I am trying to cement in my mind is I'm looking at all these trading pairs, right? And these not all the trading pairs that I'm looking at. These are the ones identified as possible setups. And as the week goes on, I'll keep my eye on them. So let's say one or two come to a situation where, hey, it's a high probability trade. You know, you got all these correlations that are for you, that are for a high probability setup. So this is the situation I'm trying to cement in my mind. I don't want to be in two trades at once, meaning one or both trades have not hit that 50 pip signifier. So the Euro Swiss franc, the daily on the Euro Swiss franc is in my favor. We have some hidden bullish divergence both on the MACD and the stochastic. We have waning. Let's blow up this MACD. We have waning negative momentum on the MACD, and we have on the stochastic. We are in the oversold territory. Both have hidden bullish divergence, both on the MACD and the stochastic on the daily. Only thing, the 4 hour, we have strong histograms of positive momentum, and we are about to go into the overbought territory on stochastic of the of the stochastic. Now, when the market opens later on the day, I imagine uh, I'll be triggered into this price because of the spread. I'm risking 1%. No, so I'm risking $100, and the pip, each pip is, that's the wrong one. Yeah, I think each pip is, let's see here, 70 cents each pip. So essentially, I'll be losing $70 if it makes a lower low. I don't think it's going to make a lower low. I think I have a 50 pip wide stop loss. So 50 pips is the max that I will do. And I'll do, just say 50 pips is the max. I don't think this will make a lower low. I think what will happen is price will go down here somewhere and then reverse. Let's see if it does. Let's see if it does. I don't think it'll make a lower low. If it makes a lower low, obviously, I'll have to rethink my strategy. But I don't think it is going to be a lower low, only because the daily is showing a hidden bullish divergence on both oscillators. Um, so right now I'm choosing the dollar CAD and the Euro Swiss franc. The other trading pairs that I see a high probability trade is just the Aussie and the Swiss franc. So a 3-day, a wider view. So as you can see, that same structure where it's already between 50% and 618 retracement because of the steep decline. I bet this is in March. But it set an area where it came up, hit its head, came back down, came up, hit its head, came back down, came up, hit its head, and came back down. This is the 3 days. Let's go to the daily. Look at the oscillators. We have waning negative momentum on the daily, and we're in neutral territory on the stochastic. On the 4 hour, we have waning positive momentum, and we are in overbought territory on the stochastic. But that daily, as you all know, is a more significant time frame. So again, I'm expecting the breakout of this local resistance area right here. breakout of the local resistance area, again, I just discussed the 50 pips. The next area of resistance, or the likely area the price will run to, will be this historical support resistance area right here at 119 pips higher. Obviously, 50 is above, it's more than 50 pips. Actually, no, that is a 618, where price likely will run up to a 618 area. The historical support resistance is 193 pips. So my first scale out will always be at 50 pips. My second scale out will be at the 618 area. Let's do this. All right, so, well, I should move this down. First scale out should be around right here, 50 pips. Second scale out should be at the 618 area right here. My third scale out then would be, let me fix that, would be at that historical support resistance area right here at 193 pips. So on the Aussie Swiss franc, first would be 50, and then 122 pips and 190 some odd pips. Yeah. Now, I don't have a trade in for that, but this would be my my third option. You know, let's say if the dollar CAD hits 50 pips, then I would be looking forward to put a trade in right here. The only thing is the oscillators are not working in my favor, so I will put a trade in at that resistance area at the top. So I would monitor it before I put a trade in. I would definitely monitor it before I put a trade in. The daily is slightly working in my favor. The 4 hour, I would want it to line up with the daily. And the third pair I want to look at is the dollar yen. Me and the dollar yen has had a nice dance so far. Nice dance so far. Let's look at the 3-day. The dollar yen has been in this declining right angle formation pattern since 2017, January 2017. And it has, so this thick white line is the bottom of that right angle. Has came down, tested it, came down, made a higher low relative to this high, tested it again, came down. So essentially it's in the range right now. It's in the range right now. It made a lower high. So what I'm thinking is this is a double. Not only do we have a double top, but a double bottom. We have more touches on this bottom. Let's go to the 4 hour. We have more touches on this bottom right here than we do at this top. Why do my MACD keeps shrinking? I think it's because I go to the line, to the lower time frames. So uh, I won't put a trade in here until it breaches it right here, this bottom area. And of course, that's how you measure up a double bottom, as you want a confirmation by breaching the bottom, the support area. Why? Well, because our MACD and our stochastic on the 4 hour is not in our favor, albeit the price is way above this area right here. But on the daily, I believe it's in our favor. The daily is in our favor, definitely in our favor. So I would make sure that I will put a trade in right here. Because I did get chopped up right here. I thought this was an actual bear flag, but it wasn't. So I did get chopped up right there. And a measure move of this formation will be to take the low in between the tops, bring it down, and to be honest, it should bring us to the bottom or near the bottom of this descending parallel channel. And I wonder. I'm just playing around here. Nah, that I just like the g- geometric patterns of the market. I think that's pretty cool. That's how I'll take the trade. Take a trade right here, short it, and go down. The daily, I believe the 3 day is in our favor. Also, in the weekly, we have waning negative momentum on a weekly, but that's the dollar yen. If every the yen would be my fourth idea of the week, but I'm trying not to take so many trades in a week, maybe one or two, possibly three, 1 to 3 trades. Swing trader, hold them. It's no telling how long it's going to get to these areas where I scale out. Obviously, scale out 50%, move my stop loss up, scale out, hit the second scale out, move my stop loss up to the 50 pip area, and then so forth. I'll trail it in that fashion. But that's where I'm at right now. Right now, I'm looking at well, I'm already in a dollar CAD, and I'm looking at the Euro Swiss franc. Let me know what you all think. If you all have any comments, leave it down below. If you all think I should do anything better in terms of the show, let me know. Uh, Trying to get this channel up off the ground. I've been neglecting it, but you don't want to hear that, so I'll stop. Hey man, just be consistent, man. Just be consistent. So with that said, as always, don't forget to like, comment, subscribe, and I'll catch you guys out on the next one. All right now. Peace.